All right, guys, back to work tonight. I know. Better late than never. That's all right. We're back to work tonight. It's Tuesday evening. We're getting ready for Wednesday's trading session. Had some really nice moves on the charts today, and that means we're setting up for some nice trades here for tomorrow. I have a lot we're going to cover tonight. I'm going to cover all my favorite trades for Wednesday's trading session. That way you have a game plan to make some money on hump day tomorrow. And as always, before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. That way you don't miss tomorrow night's video upload. And if you guys enjoy the video, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? I'm late as it is. Wednesday is not going to trade itself. I was not going to leave you guys hanging on this going into Wednesday's trading session, especially not with some of the great trades we have on our radar for tomorrow. Boy, big moves today. Man, oh man, the bears came roaring back into these markets, right? Big move down on the Nasdaq, big move down on the Emini, and a pretty darn big move down on the crude oil. Boy, what a difference a day can make on the oil futures. Now, on the Nasdaq and the S&P, we get some ranges on the charts right now. Big move down into some ranges. Those ranges are going to tell us where the best pullback entries are going to be tomorrow. And my goal is, I would like to do is get some bull traps, right? Trapping some of these buyers here above the highs of those ranges. We'll talk about all this stuff tonight, obviously, in this video. Oil, right? Oil made a big move down today. Got a bunch of key levels, right? I'd love to sell some pullbacks. Again, the key is always trapping in those buyers, right? On those nice deep pullbacks. I'm going to talk about the short side, selling pullbacks tonight, but I'll tell you, you'll see tonight, there's also a couple reversal opportunities here to be buyers tomorrow as well. Anytime we see big moves like this, there's potential for a nice big bounce. So we'll cover the short side. We'll cover the long side too tonight. You'll be amazed how many good trades we have on our radar for tomorrow. Now, speaking of tomorrow, let's all get in the same page here real quickly. There really is kind of one news event that you got to be aware of tomorrow, and that is that Chicago PMI number at 9:45 a.m. Eastern time. I wouldn't worry too much about that ADP number. That ADP number doesn't usually move the markets very much. That ADP number, though, usually sets things up ahead of that employment number coming on Friday. So, I would be aware. There is a news event at 8:15 tomorrow, but usually that's not going to be a market moving event. If I had to guess tomorrow, I would guess the market or the event that has the most potential to move these markets, at least the news event that we know about tomorrow. We'll obviously keep our eyes and ears open for any more updates out of OPEC, any more updates out of Ukraine, any more updates out of the Fed right now. So there's all kinds of stuff going on here as we go to the end of the month. But that Chicago PMI number, that is the big news for tomorrow. Don't forget, oil has its weekly inventory report at 10:30 Eastern time, so be aware of that. Oil can get pretty dangerous between 10:20 and 10:40. I tend to sit on hands for oil trading Wednesdays about 10 minutes before and 10 minutes after that news. And it's also important to keep in mind, tomorrow is the end of the month of August. The end of the month oftentimes leads to an increase in volatility. So hopefully we'll get a nice bump in some volatility for tomorrow to finish up the month tomorrow morning in our trade room. So Chicago PMI is expected to be the big market mover for tomorrow. But of course, we've heard a lot from the Fed the last couple of days. We've heard a lot from OPEC, right? We heard from Iraq and Iran today. So a lot of different stuff going on out there right now. We're going to keep our eyes out or keep our ears open tomorrow for any unexpected headlines. Now, back to our charts, because after all, right, this is where the money is, right? Now, guys, I'm going to cover all my favorite trades across all of these charts tonight. Whether you trade one of them or you trade all of them, make sure you watch all the way to the end, because you'll learn something new throughout the entire video lesson here tonight. And I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way throughout the entire video here tonight. Let's jump into the NASDAQ. We'll go NASDAQ, S&P, and crude oil. Don't forget the NASDAQ. The NASDAQ and the S&P are usually very much identical. They're very, very similar. And so everything I talk about in the NASDAQ can pretty much be applied to the S&P and of course, vice versa. This is a 4,000 tick chart, upper left-hand corner on the NASDAQ. If you're ever wondering what time frames I use, you can find all the time frames there in the upper left-hand corner. There are three basic clues, three key insights on this chart tonight that tell us where the money is for tomorrow. First things first is there is an overall bear bias, right? That bear bias tells us that if I can, I'd like to be a seller here. there are some buying opportunities, but we know that we have to be very careful picking our spots wisely to be a buyer right now. I definitely have some good long setups we'll talk about here tonight, but an overall bear bias, so we'll try to stick to the sell side here if we can. Next key insight is that strong move that has now been retested. Now, why is that an important clue? Well, you guys have probably heard me say this many times. Anytime we see a strong move in one direction, we expect for sellers, in this case, the sellers to come in, sell the bounce, and retest the low. Right? We always say that's mission accomplished. Well, at this point now, they've already retested that low, and the way that I describe it is now the urgency is away, right? Now the urgency is off. Okay, when I see a real strong move down, right, for the bears today, there's a lot of pressure to sell into that. There's a lot of urgency in the market to sell, right, because you have all of that strength going lower. Once they take out that low, that sense of urgency now is gone. And what that usually tells us is at that point, we have to be very patient now to wait for a deeper pullback now to attract in more sellers. Now, could that deep pullback turn into a reversal? Absolutely, it definitely could, which brings me to my third and what I really think is probably the most important clue or insight on this chart, which is that range and the rotation off the low. You'll notice here the market pretty much took a nosedive, right? Went into a trading range, retested that low, and now we should be making our way rotating back higher. We talked about range rotation. That was the reason why we anticipated that move going higher in last night's video. Now, these pendulum swings coming off the low, they are, well, I'll tell you right now, they are one of the easiest clues to anticipate a reversal. Because what happens a lot of times is as the market rotates off that low, this momentum can really get very strong there for the bulls. Now, obviously, we're very bearish right now, and so bears are looking to sell off that high. But I'm going to warn you right now, though. These are the types of scenarios that do often produce a reversal. In this case, a possible short squeeze. And I'll tell you, we've had a couple days of very big moves down. It wouldn't surprise me if we saw a bit of a squeeze, because today's move lower was pretty aggressive. It almost came out of nowhere, right? Because of the way it kind of ground down like that. So that range rotation off the low is very, very important here. It tells us that momentum starts to build, and I can definitely look for that short back down, but again, don't be surprised here if it punches and keeps on going, right? Possibly all the way back up to retest today, which will soon be yesterday's high. Now, looking at the chart right now, knowing what we've talked about so far, how do we make money on this? Well, really, there are three different ways in which I can sell off the high, and we'll talk about what a reversal might look like here. Okay, so I'm going to cover the short side. We'll also cover if it goes lower and if we can buy it back up or what a breakout looks. I'm going to cover all the different sides of this. That way you're ready for making money on this stuff here for tomorrow. Okay, as we go higher, I really like that pendulum swing area. I really like these areas up here for key areas of resistance, and I'd like to sell back down again. But here's the challenge. The problem is a lot of momentum coming up off of that low. So knowing that momentum is a challenge, the first one I'm looking for is a crown reversal. We run up, the buyers try to buy the pullback. They try once, they pull back, make a lower low, they try twice, and we get a trap high and a nice strong signal back down. We call these crown reversal shorts. In this case, crown reversal. Right, we run up into overhead resistance. Remember, a lot of momentum here at this point. Buyers are trying now to continue that move going higher. Let them try once. Let them try twice. Think about now where their stops are, right? Those stops are the gasoline. Those stops give you the edge to run out those buyers and sink this sucker right back down to retest the low. If I can get a short off the high, I'll take some profit off at the low of that range and leave the runner back to take out that big low at 247.5. That's one way I can sell this market as it goes higher. Here's another way I can look for it. Let's say we now go higher. Let's say now the buyers come in and they don't try once, try twice and fail. They hold the pullback and they double top now off of that high. Okay, these are one of my favorite types of reversals. I call them double top reverse or double top reversals or double bottom reversals. At this point now, strong move up. The buyers retest the high. Remember, the big money buyers, they're going to buy nice and low. So now, if we don't break out through that high now we can trap in some of the small buyers, right? Some of the weak hands in the market. Let them try once. Let them try twice. Again, because we have to be aware of that bullish momentum coming off of that low. Now, we don't need the trap entry on this one. All we need is to get those buyers roped in, right? They've already retested that high. Now drop my sell order in right below that low. Think about where their stops are, and I can now sell right into those stops for a move back down, back to retest the low. One of my favorite setups with these double top reversals is we go up, we pull back, we retest the high, we trap in some of those weak hand buyers, 1 and 2, and we sell into stops. But now, the party's just getting started now. Where do the bears want to go? They want to go back down and bury those lows, right? They want to take out those lows. So now what you do is you find a new channel. You draw off that low, you pin it up around that high, look left, find that pullback, right? Find that pullback or find that swing, right? That swing high, and then you want that first test off the high of that channel. Okay, so now we have a strong move up, retest the high, buyers once, buyers twice. We look for that nice juicy signal. You'll learn more about signals and what kind of qualifies the entry in our free trading classes here at School of Trade. So make sure you grab those. And then as the market rolls over, I'm then looking for really any of the entry patterns I teach in that free trading course, right? I love traps. It could be a trap. It could be a failure. It could be a pullback combination. And again, looking for that first test off the high of that channel. And I've talked a lot about the free course so far, right? And inside that free trading course, you're going to learn all of these, right? All these setups, right? The traps, the failures, all the entry techniques I'm going to talk about throughout this video right now. I know a lot of you guys have taken that free class already. You've learned all the setups. In fact, I got a bunch of emails just this morning talking about making money on 2-try failures and crown reversals. But listen, if you haven't taken that free class yet, if you're one of the few watching this video right now who haven't taken that free course yet, I'll put a link up here for you in the upper right hand corner. If you're missing the best trades each day or you're taking too many losses, grab that link, take the free trading course, and learn the 3-step strategy. The strategy I teach in that free class will get you into more winners, help you avoid expensive losses, and most importantly, it'll give you a ton of confidence. That free trading class, that strategy is perfect for someone trying to make the jump into full-time trading. So grab that link that popped up there. You're going to love that free class. I have hundreds of examples of things like crown reversals, right, and double top reversals going lower. So now we've kind of talked about the two kind of core ways to short this. What if the market went up though and then did like today, right? Like today we saw a V-top. Right? What if we go up and then right back down again? What if we don't get that chance to trap in those buyers? How do we trade a V-top like that? Those are tricky, aren't they? They are. They're very tricky. What you want to think about is you want to think as it goes up, right? Now comes back down, look for the grind. Right? And you look back at today's chart, you'll notice, right? They kind of grind down, right? So once you start seeing it grind down like that, that's an easy giveaway. Mark that low, mark that channel high, and then go looking for swings, right? And what you want is you want that trap. You want to get above the moving average, get buyers coming in, trying to buy, hit their stops, right? Either a trap, a failure, and again going back down to retest the low. Does that make sense? So when you see those kind of V-tops like that, what'll happen is it'll kind of climax and then pull back and begin to grind down, right? And you won't really get that good 2-try signal. At that point, tight trend line off that low, tight channel off the big high, find those prior swings and be ready for that first test, right? That first test off the high. That's another pretty easy way to trade this if it pops up and then kind of reverses immediately right off of that high. Now, How do we buy it? As we go higher here, I mentioned earlier, these are the situations that lead to short squeezes. These are the situations that lead to a reversal. There are really three ways you can buy both the NASDAQ and the S&P. Remember, this will also cover on the S&P as well. Let's say, for example, that we jump up into levels of resistance up overhead. We pull back to the moving average, but instead of the buyers trying and failing, the buyers come in and they go, see ya, and they blast, right? We get one of those 1-2 blast moves going higher. If they pull back into levels of resistance, hold the pullback off the 21 EMA and jump off the moving average, well, at that point, that's a reversal, my friends. We're going to mark off a high trend line. We're going to find a channel off of that low. I'm going to drill down, find those prior swings. I love traps, but you can trade traps, get under the moving average. Speaking of traps, trap in those bears, try to sell it back down again, and hit them right where it hurts. Now, an easy rule of thumb on these 1, 2, 3 reversals is the first leg and the third leg will almost always be very symmetrical. So keep that in mind as we go higher. We're looking for the pullback off the low of that new channel. Once we know how deep that pullback goes, we can measure that first leg and project that up to give us a nice razor sharp target for the exit. You have to think though, if this market was to reverse, you got to think they're going to go back to that high from today, right? That 12,658 level as we go here. All right, you want to cover a few more of these, right? Want to talk about how to be a buyer on this going higher? Why don't we grab that on the S&P? All right, we've covered enough of the NASDAQ here for now. Why don't we grab a look at the S&P? Again, the S&P, of course, is going to be very, very similar here to the NASDAQ. A lot of this is pretty much identical, right? We have a strong move down here on the S&P. They've already retested the low. The urgency now is all behind us. Now we want to wait for a deeper pullback to sell that sucker back down. But again, with this trading range and this potential rotation off the low, again, these are the situations that produce big time reversals. And again, right now we're very bearish, so we're not looking for the reversal just yet, but do not be surprised if we get it. Now, we talked about that 1, 2, 3 reversal on the NASDAQ, right? So that's a pretty easy one. How about this one? How about a real strong move higher, a shallow pullback, and a higher high in price? Shallow pullback, higher high in price, traps, baby. These are very common in a short squeeze because for whatever reason, let's say some news comes out overnight, the market just simply blasts, right, and blows right through all of this level, right, all of these areas of resistance. You see a strong move up, a real shallow pullback, a higher high in price. Once you see, say it with me, strong move, shallow pullback, higher high in price, traps, baby. That's my favorite trades whenever we have kind of like a runaway market, right? Whenever it really runs like that. Strong move, shallow pullback, right? Shallow pullback drives the pullback traders crazy because they can't get in, right? The fib levels aren't getting hit, right? And that higher high confirms that trap is there for you. That's a great way to buy it as we go higher. And then also, too, probably one of the most common short squeeze patterns is a pop and grind. You know the pop and grind, right? The internet's favorite dance move as we joke around on these videos. We pop up, right? We don't pull back to the moving average and blast. We pop up now and we start to kind of grind away from the moving average, right? We saw a pop and grind down today. If we get that pop and grind higher, mark off that high, mark off that big low. See how I draw these channels almost backwards like that? And then I go out and I look for those prior swings. I try to get underneath a prior swing. That's usually where the best money is to be made. I get underneath the moving average so I can rope in some of those bears and I use their stops for fuel, right? Traps, failures, these will oftentimes pull back for a pullback combination. You'll see a lot of examples of those all wrapped together here in that free trading class that I mentioned before. So definitely grab that as well. So I think now we've covered the details here if the market was to go higher. Here's one more thing you want to think about on the buy side here for the S&P and the Nasdaq. Let's say we go higher here overnight. The buyers try once, the buyers try twice. We get whichever one of the entry patterns short we talked about already here on this video. Then we go back down to retest the low. At that point, we now know the bears who sold up here, they're taking their profit. And now we have a chance to rope in some of the weak hand sellers. This is not a great place to be selling down here. And so once we get that big pullback and the price has a chance to go back to retest the low, now what I can do is I can trap in the bears, let them try twice. Why twice? Well, again, because it's so bearish, if I want to be a buyer, I need some sort of catalyst. I need some sort of juice. I can't just buy into support levels when we're bearish like this. I wish it was that easy. Let me start back here, right? We take out that low, the bears try once, the bears try twice, and then we get that pop running higher, right? That's the idea behind these double bottom reversals, right? So we take out that low, we pop up, we get all the way back down to retest the low. All the smart money is selling up top here, right? But now the weak hands come in, we trap those weak hands with 1, 2. We don't need a crown reversal. We don't need a trap low on that, but we definitely can use a trap. The key though is you want to think about those bears trying twice, think about where their stops are going to be and try to hit those stops, right? Now, at that point, where does the market want to go at that point? It's going to want to take out those highs over there. Okay, so we'll take a quick first target, top of the range, leave that runner, back up to retest those highs, right? And then think about it, right? That could be that reversal we talked about. So keep an eye out for those reversals, or keep your eyes open for as we go up, 1, 2, and right back down again, right? Rinse and repeat over and over again. That's a pretty good idea, right? Buying off that low. Now, here's a comment. Here's a question I can anticipate coming here. What if we go lower right now? Can I buy off that low now? I would not do that. That would probably be a very, it won't be a very reliable trade if we do it now. What I really want is I want us up, short off the high, or let them short off the high, retest the low, and then, because then what that will do is that will trap in all the weak hands, right? The smart money's up here, right? They're getting out down here. If we grind down like this, if we just keep going lower here overnight, it can be very difficult to pick that bottom. You know, oftentimes if we do roll over, you'll see them try once, twice. They'll try to go higher, but they'll keep on grinding down, right? So I really think the best way to buy off that low is to wait for it to go up and then come down, then trap in those bears with those 2 try failures off of that low. Now, let's talk about what if the market makes a strong run lower. This will also, of course, apply to the Nasdaq as well. Now, we talked about those 3 types of reversals. These are very, very similar here. There are really, for the most part, there are 3 different types of breakouts. It's actually 4 types of breakouts, but I'm not gonna go over all of them here. I'm running a little bit late here tonight on this video. Let's talk about 3 types of breakouts. My favorite type of breakout is that pop and grind, right? So we pop down. Again, there will usually be some sort of news headlines coming in with this. We'll pop lower, we'll grind down, and at that point now, it's just a matter of finding that new channel, mark up off that high, and then simply trapping in those buyers above those prior swings. Remember, first leg, third leg is a very common way to find a target. If we break out going lower, where do the bears want to go? I would imagine that 39.18 to 39.12 and a half. Now be very careful here, right? Be very careful with this market making a move lower. I'm not trying to sell into that move lower, right? That's not going to be a very good strategy. What I want to do is take out that low, hold the pullback now, and let's see if we can really blast going lower. There's one of those 1, 2, 3 breakout patterns, right? 1, 2, 3 moves are very, very common. We'll talk a lot more about those in our trade room tomorrow morning. Mark that trend line, find that channel, drill down, find those prior swings, and you got it. Get those traps, get those buyers trapped above the moving average. Remember, the easiest money you're ever going to make in day trading is when you can trap in, for example, buyers trying to buy it back up, right? Trap in those buyers above that moving average around the top of that channel. It's a 1, 2, 3 move. The first leg and the third leg are going to be symmetrical as we go lower. And of course, the last one is that 2-try breakout. So this one has to be very strong, right? It'll be a really strong move down. It'll be a shallow pullback to the moving average, a lower low in price, and that's the traps will come in. This is the one where you really have to see a lot of momentum pushing lower, right? You really got to get a very strong move there. These are not as common on a range breakout going with the trend, right? They're very common when we reverse the trend, right? Because you get that squeeze involved, if that makes any sense, right? Strong move, shallow pullback, lower low, traps, baby. That's, of course, another great breakout going lower. And again, be very careful if this market grinds down like this. Be very careful trying to pick a bottom on this. You'll get a lot of false signals trying to pick bottoms in really heavy bear markets. All right, guys, I'm sure I've covered a lot so far. I'm sure I missed a couple things. So, obviously we'll fill in any blanks tomorrow morning in our trade room. I unfortunately, I can't predict every possible scenario here, but I'm usually pretty accurate on what this stuff will look like. How about some crude oil? Wrapping things up here tonight on the crude oil. Crude oil has 3 key insights here telling us where the easy money will be for tomorrow. We are back to a bear bias now. We had flipped to a bull bias because there was some violence, there was some unrest in the Middle East. Well, they pretty much squashed that today and, of course, squashed the price of oil as well. So we're definitely bearish right now. We would like to be a seller. If I had a choice between what side to trade, I would like to be a seller. The next big clue here is a strong move down. Okay, why is a strong move down? Anytime we see a strong move in one direction, we expect price to pull back up into levels of resistance, try to retest that low, and then from there, that's exactly where one of those double bottom reversals come in, or potentially a breakout as we try to make our move down to that 86, 81 area. That's the next big kind of support level we have on this chart. So a strong move down is a very important clue because strong moves love to pull back and then retest those lows, just like we talked about earlier on the S&P and the Nasdaq. But then what does this mean? A large move down. Why is that an important clue? What's the difference between a strong move and a large move? Well, a strong move may not be a large move, and a large move may not be a very strong move. This is a very large move. And for the most part, there wasn't really any deep pullback here today. The market pretty much just ground down right along with the S&P and the Nasdaq. Why is this an important clue? Anytime we see a large move one day, we know the challenge is to wait patiently for the price to pull back high enough to make it worth the time to sell high. As we always say in these videos, we have to remember our job as traders is to sell high. And if the market makes a really, really big move down today, well, now, and given we may not get that deep pullback, we'll talk about how to trade shallow pullbacks today. But the goal of this tomorrow is we have to assume that sellers are going to be waiting for some sort of relatively deep pullback to give them a little more meat on the bone, right? They're not going to want to sell way down here unless something changes, right? Unless we get some new headlines, right? Unless something changes, unless we get some new fresh news update overnight that changes the opinion of the markets. So all things equal right now, we expect this thing to want to pull back and pull back relatively strong, right? Why? Because we expect sellers to resist the idea of selling really low. So whenever I see a real strong, big move in one day, I always think about these 3 types of pullbacks. And those are shallow pullback traps, modest pullback failures, and deep pullback 2-try failures. Okay? Can I follow how I'm going on this one right now? Let's say, for example, that the market simply pulls back, doesn't quite go all the way up into some of these levels of resistance, and then something comes out, right, and we see a shallow pullback. Shallow pullbacks are tough in this situation because, again, we really can't assume there's a lot of bears in this. So if all I get is a very shallow pullback, I need some sort of trap to trap in some of the buyers and use their stops as fuel, right? There'll be a lot of bears waiting up here because it's a very attractive area because it's a great risk-reward ratio. We have to assume a shallow pullback unless something changes again overnight, right? We have to assume a shallow pullback. There aren't going to be as many bears to help push that market back down to retest the low. So we have to trap in the buyers and use their stops as some sort of catalyst. And that's where we look for the 1 try and the 2 try and that little trap high, right? Traps are where smart money traders are always waiting after a really deep pullback or after a really big move that hasn't pulled back very far. So keep an eye out for that pattern and a retest of that low. All right, I'll talk about a buy the low here in a second. Okay, we covered a little bit of that earlier on the S&P. We'll cover more of it right now. Another one would be as we go higher, right? We get into some of these areas of resistance, the top of that channel now. At this point now, we're just high enough now to get the buyers thinking, ooh, maybe this is a reversal, right? Once those buyers try now, think about where their stops are. Now at this point, I have a pretty good risk-reward ratio. I can risk small to earn large. So a trap isn't really necessary. What I need though is I want to get some sort of edge on this trade by trapping in those buyers. Once those buyers start thinking this thing is a reversal and start to buy that pullback off the moving average, I'll grab my order and look for that nice signal candle. And again, you'll learn about signal candles inside that free trading course, which again is linked up there in the upper right hand corner. Now remember, these are failure patterns. These failures oftentimes then roll over and turn into a first pullback. We call these failure into pullback combinations. Failure into pullback combo. So keep an eye out for that as well, right? That's kind of a modest pullback into levels of resistance around the top of that channel. But let's face it, what I really hope we get is up into this area, right? Get that trend line hit. Get up into like this guy right there, right? This 93.78 is a prior swing low. This whole area is a very, very attractive area. But listen, what if we get this really, really sharp pullback here? Is that a reversal yet? No, it's not a reversal yet because, again, we're anticipating a deep pullback because of the sheer size of this move. But I'll tell you right now, though, a lot more buyers will come in on this one. Right? If we really come back up, like up into that area, at this point now, the buyers will definitely be interested in this one. At this point now, this is exactly where the 2 try failure comes in. We want to let those bulls try twice now and then drop our order in right below, right, or into that sell signal and sell into those stop losses. Now remember, this is the good stuff because now you have all that space going back to that low. And so now as the market now begins to roll lower now, right, that's what the good stuff happens. Now we can find that new trend line, find that new channel, and we can start looking for traps and entries off the high of that channel. Just make sure you get that entry. That first test is the best test, as we always say. That first test off that channel high, get that entry before you get back down to retest the low. All right? So those are 3 different ways we can sell this. The shallow pullback is a trap. The modest pullback is a buyer failure, and the deeper pullback is a 2 try failure because, again, that gives the buyers a whole lot more interest, right, in that pullback. And as you can imagine, if we go up into these areas of resistance, okay, let's say something changes here overnight. Oops, there's more violence in the Middle East. Oops, there's a big problem with supply, right, whatever it is, and the buyers come in and they jump off that moving average. Yep, gig is up. That's a reversal. I'm not buying that first pullback, though. Again, you can't trust that first pullback, right? That is a 30% trade. Okay, you're not going to make any money long term with that type of trade. Maybe you can try a couple times, but it's very difficult to make money that way. I'll mark up that high. I'll mark off that low. I'll find that prior swing. And this one right here, this is probably a 78 to probably a 75 to 85% trade right there. Because now you've got that momentum turned and there's so much FOMO. Everybody wants that entry. And again, I like to go after traps below prior swings, get underneath the moving average for a failure pattern. We've talked about this stuff, quite a bit already. I would also think too, we pop up and we start to grind and grind and grind. A grind, remember, the grinder is the most common whenever we reverse because the opposite side of this market now is literally walking away. So we draw that trend line nice and tight off those highs, anchor it down at that low. I know it seems kind of weird to draw it that way, and then wait for get that first pullback, try to get underneath those prior swings, get those traps, get those failures, get those pullback combos. And where do we think the market wants to go at that point? Well, again, first leg, third leg will give you a pretty good idea of where your best exit target is, but you'd be wise on these reversals, though, to leave a runner, right, back up to retest those highs. So keep an eye on that. Now, what if we go up? We get that short off the high. We're right back down to retest the low. Does that look familiar? It should, right? Because now the smart money comes in, they're selling high. Now trap in some of those weak hands, trap in some of those inexperienced traders up there now. We go up, we trap in those buyers, we run it back down, we retest the low now. Moving average comes over, bears now, inexperienced traders, right? People who don't watch these videos, they don't know any better yet. They haven't paid their tuition yet to the market like most of us already have, and they try once, they try twice. Their stops are sitting right there. What happens when you get stopped out of a short position? You buy your way out, and this, of course, is where things can get very explosive, right? I'll take my profit targets off, back up at that high, right? I love the way these types of sequences go. We can sell high, take your profit back at that low, and then trap in those bears and squeeze it right back up as we go. So keep an eye out for that reversal off that low as well, right? Remember, as it goes lower here, though, be very careful picking that bottom here, all right? You really ideally want to go up, down, and then bounce, right? You want those bears up here selling into it, taking their profit, and then trapping in the bears and running it back up again. What if we roll over? What if we keep going lower here? Anything change? No. Really nothing changes. The only thing that will change is I will adjust my channel, right? So if the market was to roll over and keep going lower here, for example, right, we open up, we 1, 2, 3, make a run going lower, right? That's called a 1, 2, 3 breakdown, okay? Mark that low, mark that high, find that channel, and we're selling off the high of that channel, right? It goes up, it rolls over, pop and grind. We find that new low. We mark off that channel high. We find our traps. We've talked about these quite a bit. Where does this market want to go at that point? Right? If we go up, we get that short off the high, the market takes out that low, it just keeps on going, right? Keeps on going. At that point, new channel off that low, new channel off that high, and we're simply taking whichever one of the entry steps we can get off the high of that channel, all right? We know that next level down there is at 86, 88. Where are we at? 92 right now. $5 down is what, 87. So not unheard of, right, for a move back down to 86 half. It will be a pretty impressive move, though, to take a $7 move today and make another $5 move tomorrow. But hey, end of the month, end of the summertime season, low volume going into the holiday weekend this weekend. Anything is possible, and now you have a very, very good quality game plan for tomorrow. The next step is now we get together tomorrow morning and we trade this stuff together. Our game plan is put together here tonight. The fun stuff is tomorrow morning, 8 o'clock Eastern time in my trade room. If you're tired of missing the best trades each day or you're making too many mental mistakes, my trade room is a great place to come out and learn and trade along. I would recommend start with the free trading course first, learn the basic strategy, get that going on your own charts, and then that way you'll be primed and ready to kick some butt with me every morning as a member of our morning trade room. I'm going to put all the links you guys need right below this video here tonight. Don't be afraid to call the office. I'm here to help out if you have any questions about brokers or charts or any of our membership specials right now. Call the office there. I'm always here to help out. We got live chat on the right-hand side, and you can always drop comments in the comment section below. All right, guys, have a great rest of your evening. Again, thank you so much for patience here tonight. I apologize. I'm a little bit late on this video. If you stuck around all the way to the end, though, kudos to you. I will see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. If not tomorrow, you better come back and see me tomorrow night. I will, chances are, be on time tomorrow night, right? I'm like clockwork on these videos. So if I don't see you guys tomorrow, I'll see you guys same time, same place tomorrow evening. Be well, be nice to each other, and you better be here tomorrow. Adios, amigos. Bye-bye for now.